Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Friday, the 11th of May, 2007, and the market's closed. And it did a good job of getting back most of yesterday's losses. The spiders were up $1.17 or 0.78%. They didn't quite eliminate the losses from yesterday. However, it was very impressive that the market could turn higher like that without a little bit of further consolidation at lower levels and maybe even a little bit further selling. So, as I always say, in an uptrend, it's innocent till proven guilty. Any trade that you take against that trend is going to be high risk. And today definitely proved that true once again. As buyers came in right from the open, it consolidated under that 5-day moving average. And at the end of the day, we had a nice push above that level. So, if you're betting on the short side, it's got to be extremely frustrating. I'd rather sit on the sidelines and cash rather than agonize through that short selling when the trend is clearly higher on the daily time frame. So it looks like the market did recover nicely, and now we can look at this low as an important low near 149.27, 149.25, let's call it. That's going to be an important level going forward over the next week or so. If the market continues to hold above there, no reason to think that these gains can't continue to extend to the upside. The market didn't even pull back down to that rising 20-day moving average, just showing that there's buyers out there just waiting in the wings for lower prices. And a lot of people think, well, it's up too much, and you got to say compared to what? Compared to 1929? That's irrelevant to talk about something that occurred in the 20s and how many days we've been up out of how many other sessions. That's completely irrelevant. Let's look at what matters in the market right now, and that is that the trend is higher, and that's what continues to pay people who are participating. To otherwise fight it is just an effort and frustration, and you're going to get your losses. So the Nasdaq also finished strong with a gain of 1.1%, up 54 cents on the Nasdaq 100. And we can see here that very nice uptrend remains intact. There's no reason. I get a couple emails asking me what price should we buy the quid at. There's no price that you should buy the quid at right now. You got to sell short the quid because the market is in an uptrend. And again, it surprised me on how quickly it recovered. A lot of people were probably looking at this level as a level of resistance, and I certainly thought it had the potential to be resistance, but it quickly rallied right up past there, and then it acted as a support. Same thing we saw in the spiders is that the 5-day moving average kind of held it back a little bit, but buyers came in right at the end of the day and continued to push it right up to its highs for the day is where it closed. So again, a very impressive session. Let's take a look at the quid just because I did get a few emails about it. And the QID, this is the double inverse Nasdaq 100, is in a clear downtrend. Just as the Qs have been finding support along the 10-day moving average, these guys have been finding resistance along that 10-day moving average. And here it is, the 20-day moving average that acted as resistance. But clearly, we're still in a downtrend in this QID, and it looks like there's probably going to be, just as the this prior level of support near this 49.25 level, looks like it acted as resistance earlier or about 2 weeks ago, and it's just the looking at the Qs upside down right here, basically this resistance here. So we've got a strong uptrend. No reason to think that this market is reversing. There's absolutely zero technical evidence that the buyers are gaining control. We did have heavier volume on the sell-off yesterday. You could look at that as evidence, but it's price that pays us, not volume. So let's just continue to focus on price action. The semiconductors finished with a gain also of 1.2%, up 46 cents, and again, came close to completely eliminating yesterday's losses. So we've got a very healthy uptrend in the semiconductors. They came down to that rising 5-day moving average and bounced nicely from there. Now the in order to get to new highs, 38.20. Looking at the weekly time frame, again, we had a very significant breakout here, and it looks like it's destined for a move up towards about $39 a share or so. So there still could be $1 or so of upside in these in the SMH. The IWM, that is the Russell 2000. This market also acted good today. It was up 0.9%, and what can you say, up 73 cents. So good day for the Russell as well. Market continues to be in an uptrend. The 81 level continues to be that important level of support. So we'd seen it as resistance a couple times over here. Now it's acting as support once again. So 81 continues to be an important area for that market. CMGI, I had suggested that looked like we were probably going to get stopped out, so you might want to exit your position near 245 today. So that gain over the last 4 or 5 days was 20 cents. So that'll do it. I will be back over the weekend with another video for trading ideas on Monday. Have a great weekend.